Hello, what you're looking at, this is Nick, the TickerTank, by the way. What you're looking at here is a one-year chart of TBT, and one thing we're seeing is some pretty heavy downside pressure in TBT after a recent rally in the bonds. One thing to point out on this particular chart is these implied volatility levels. They've been fading off recently, but we're getting a nice pop in implied volatility, and we're back in the 2 times historical range or historical levels area here. So yeah, that's what we like to look for when we're doing options trades. We like at least 2 times historical implied volatility. In this case, we have 2 times historical implied volatility, so it's a good candidate for an options trade. And what we have here is a combination of 2 things. We've got TBT trading at or near its lows, and we've got a nice spike in implied volatility and implied volatility trading at highs. So that's a really good combination here for an options trade, in this case bullish. There's a few things you could do here. You could buy TBT and then sell the front month 20 calls against it, or you could do a put spread. But in our case, we're just going to sell naked puts, and we are going to have a put spread as an alternative trade, so be sure to check out the text in the trade for that. But basically what we have, we're just nearing a area of where buyers tend to step in. We're down here. This 1850 price point seems to be a level of interest for the most part. So if we can get ourselves in a situation where the break-even is at or below that 1850 price point, then that would seemingly be a pretty attractive opportunity. We want to go out to December here. We've got 17 days left in November, so we want to give ourselves a little bit more duration here. And the December's we have 45 days, so that fits the bill. And we're currently looking at we're currently trading at 1942 in TBT, and we like the 19s. So we're going to be looking to sell the 19s at 120, and you can see basically if you analyze duplicate trade, it's going to take you over here, and we're just look at this from a perspective of one contract, just to keep things simple. So the first thing we want to do is change our probability date to December, the Saturday after Friday expiration in December. Then let's set our slice to break even on that December day, so we get a decent reading. So basically what you're seeing here is we have a 63.5% probability of break even or better on this trade, and we have a 36.5% of break even or worse on this trade. And our break-even price point is 1780, so that's well below that 1850, 1830 price point that we wanted to be below. Couple that with the fact that we've got a nice $120 per contract potential profit. It's max profit, so we've got profit capped out. We've got losses theoretically unlimited, which that a lot of people don't like not having defined risk on. So we'll go over a trade for that opportunity here in just a second. But this just gives you a nice break even. Well, gives you a nice cushion below that price point we wanted to be below. It gives you some nice duration with 45 days in December, and we are selling premium at when the implied volatility levels is 2 times the historic levels, and TBT is trading at its lows. So it's just a really attractive opportunity here in TBT. Let's talk about if we want to do a vertical. This is going to be our alternative trade idea, and it's simply selling the 1819 put spread, and let's uncheck that. So basically you can see that puts the break even just above. Let me set the slice here. Break even puts the break even just above that 1850 at 1858, assuming a 42-cent fill, and the probability is 55.5 of break even or better. Probability is 44.5 of a loss on the trade. But you do have so basically you're giving up a little bit. Your break even's moving substantially higher from 1780 to 1860 roughly, and your probability of success is dropping from 65 to 55%. But you are defining your risk. So in the previous case, we had max gain potential of $120. This case, we diminished that with a max gain of $42, but we also alleviate some of that risk where we have theoretically unlimited. In the previous example, you are $58 max risk on this particular trade. So we're going with the TBT December 19 short puts at $1.20, and the alternative trade will be the TBT 19-18 put spread, the bull put spread. You'll be selling the 19 puts and buying the 18 puts, and we'll put in about 40-cent credit there to make sure people get filled.